Good afternoon. This is Steve Bigelow with the Candlestick Forum. There were signs of the market starting to turn over. Obviously, not with the magnitude that it did, but the graphics of candlesticks are very telling as far as a change coming in investor sentiment. So today, with that big downdraft, you could see there was a bearish harami in the overbought area of the Dow and traded lower. Hadn't closed back below the T line, but what could be witnessed was the fact that we were starting to see some sell signals in the overbought condition. As we put out in our member comments for the last few days, start taking profits on charts that are starting to look weak, with the idea that the worst case scenario would be that they could bring it back to the T line, and then you see which stocks after that are providing the best buy signals, or add a few short positions to the portfolio. Now that was done tentatively because there was no sign of any reversal in the NASDAQ until we saw the gap up doji in the overbought condition. Now that still didn't indicate anything because we'd been in a steady uptrend for the last 2 months above the T line. But when we saw the pre-market futures gapping the markets down today, that was a good indication that things that weren't looking good over the last couple of days should be closed out. However, we were able to find some strong sell signals in the some of our recommendations over the last few days, based upon the fact that kicker signals starting to form. Our recommendation was on a short position was based upon the bearish kicker signal that closed below the T line on PS, putting us in the right positions. Now, that doesn't mean that your portfolio would have all of a sudden one day transformed from being fully bullish to fully bearish. No, it was a process that you were closing out long positions and adding some short positions so that you weren't fully exposed to the upside. And this was also evident. This is where the graphics, the candlesticks, make it quite clear that things might be changing in investor sentiment. As we can see in Boeing, that had a very strong price move, coming off this fry pan bottom, then a bullish doji sandwich. But notice how far away we were moving from the T line. And then a couple of days ago, it actually gapped down below the previous day's open and traded lower, kind of a mini kicker signal. But this is very relevant. If you're in an uptrend, the seller should not have enough strength to gap down below the previous day's open and trade lower. That is an immediate sign that there's been a change of investor sentiment. That becomes much more crucial the further away you move from the T line. Where was the logical target? At least back to the T line. That told you to start taking profits up here. And things like today in Overstock that gapped down, tried to trade up, but selling lower by the end of the day. This makes for an easy setup that if the pre-market futures show the markets are going to close or trade lower tomorrow, you start shorting with the idea that your next likely target is down here at the 200-day moving average. Which stocks do you want to short if the market is selling off? Obviously, the strongest sell signals. And the candlestick kicker signal is your strongest sell signal. So the evidence that the investor sentiment was changing is much more clearly illustrated when you're looking at the graphics, the candlesticks. Notice that in L brands had a nice uptrend, broke out through the 200, but when it traded up, it did a shooting star. Even though it was trading positive on the day, it was trading below where it opened. That's not a good sign. They took it up again and did a hanging man and then took it back down. This was all indications, and there was many stocks out there that looked like this that were starting to show dark candles up here, or that the sellers are starting to take control. So tomorrow will be very important to see what the pre-market futures are showing us, especially with a gap down that has produced an island reversal in the Dow, the S&P 500, and the Russell 2000. An island reversal is a very strong reversal. If this market opens lower, look for the next support level to be at least down here at the 50-day moving average. Obviously, this tells you that if you're long any positions, you should be closing them out. You can always buy them back if things turn around. That'll be it. We'll see you in the chat rooms.